The war between Israel, Iran, and the US is constantly escalating on a daily basis, and there's one thing that we need to highlight, and that is the fact that most people will be plunged further down the level of economic subsistence. That is, they may become poor as a result of this war, and that is one thing that the media is not highlighting enough. And so in today's video, we're going to look at the direct negative impact of this war on our finances and how we can protect against them if need be. And so if you're new here, my name is Nana. I hold a master's degree in business finance, and on this channel, we discuss everything personal finance and personal development. But before we dive deeper, there is a need for us to actually understand the background of the war and what has transpired over the last 3 weeks. So there was a joint military attack on Iran by US and Israel that subsequently led to the killing of Iran's supreme leader. Now, in retaliation, Iran first of all launched several horizontal attacks on US allies within the Middle East sub-region, and then went ahead also to close the Strait of Hormuz. Now, mind you, the Strait of Hormuz, for the avoidance of doubt, is a seaway or passageway that usually supplies about 20% of the world's global oil supply. And so as a result of this, the world currently has more demand for oil, yet 20% of the supply has been impacted. And that is why the price of general goods and services are rising. Now, to make matters worse, there are several nations within Asia that are now declaring a state of energy emergency as a result of the supply being impacted by the war. And so that is something that would actually spread out. It would become more like a global issue, and the negative impact of this war would affect anyone anywhere in the world, irrespective of whatever country that you find yourself. And that is why we have to give it the necessary attention in order to protect our personal finances and the progress of our everyday income. And so with this understanding, we come straight into analyzing the negative impact of the war on developed economies like the US and the UK. In the UK, we've seen mortgage costs actually rising. And so according to The Guardian, you're likely going to pay in excess of £900 per year if you're to take up a new mortgage. For instance, if you buy a house that is valued at £250,000, you're likely going to pay anywhere between £900 and £1,045 per year in addition, as a result of several mortgage deals being pulled or disappearing of the mortgage market as a result of this war. And so that is the first thing that you need to consider. Already, we are seeing signs of the negative impact of the war in several other developed economies, and that is why it is necessary for you to take the necessary steps and to make informed decisions to protect your finances. Secondly, you're likely going to pay more for your gas and electric. So according to The Guardian, the average UK household is likely going to pay anywhere between £300 and £330 every single year, in addition to whatever you're paying already. And that is simply because of the war that is ongoing thousands of kilometers away from here. So when I hear people who make the argument that, you know what, the war is so far away from the UK or so far away from the US, it's laughable, simply because now we are projecting and subsequently seeing the negative impact of all of these things and the actions and inactions of these nations in the Middle East on our finances. And that is why you need to pay attention and then prepare. That leads us to the third thing that you need to consider, and that is petrol or fuel prices are likely also to follow suit, and that is to shoot up. Now, already over the past 3 weeks, we've seen on average a 9% increment in the price of fuel or petrol at the pumps. So this is something that is actually affecting the daily lives of every single person within the UK and in the US already. And even though most strategic parks and several agencies around the world are actually releasing several barrels from their petroleum reserves, it's not enough to actually show up or make provision for the 20% of the oil supply that's actually been impacted as a result of Iran closing the Strait of Hormuz. And so this is a time where you have to sit down and then actually manage your finances, which we'll be talking about in subsequent points. That brings us to the fourth thing that we have to consider, and that is the cost of borrowing would actually go up. And so we are looking at a 5.5% mortgage rate, a marginal increment over the years, simply because of this war in Iran. That simply means that most people wouldn't be able to actually afford their mortgage payments if they are living paycheck to paycheck or new people who are seeking to buy homes may actually not have the financial muscle to actually buy their homes. And so this is how it works. Central banks are actually tasked with one thing, and that is to drive down inflation. Inflation, for the avoidance of doubt, is the rate at which the price of goods and services in an economy rise over time. So here, the Bank of England or the Federal Reserve Bank in the US are actually tasked to do one thing, and that is to bring the price of goods and services down. And that they do by actually manipulating the money circulating in the system. So there's something they call the monetary policy rate, and that is the rate at which they lend money to the central banks, that is in the UK, the Lloyds, the HSBCs, the NatWest, who also subsequently lend that money out to you. And so if the central banks actually increase their monetary policy rate, what that means is that if, let's say, they were issuing loans to the commercial banks at 2%, and now they double that to 4%, it means that there will be less and less borrowing by the commercial banks from them, which means that they are reducing the amount of money being pumped into the system or circulating already in the system and driving down the everyday price of goods and services. So that would actually affect you, because when the banks go for the loans from the central bank at 4%, what they have to do is that they also have to make profits. So they go on to add maybe 1 percentage point to it, making like 5%, or maybe 1.5, making 5.5%. And then they slap that on the initial loan that they are giving to you. So as a result, initially, you could have actually maybe gotten a mortgage at 3.5%. But because the central bank, which is the Bank of England or the Federal Reserve Bank, is taxed to actually drive the price of goods and services down, you're likely going to borrow at 5.5% instead of 3.5%. And so that would actually deter people from coming out to also go out there, seek more loans, because you're going to likely pay more from the loans that they actually take from the commercial banks. And so these are some of the issues that we are likely going to face in the coming months if we don't actually find a resolution to this war in the shortest possible time. This leads us to the next point, and that is inflation is likely going to rise. So as it stands now, the Bank of England is targeting an inflationary rate of about 2%. But now the UK is actually seeing inflation at 3%. That is as at the end of February 2026. So holding all other factors constant, because of these reduction in supply of global oil, the price of oil would actually shoot up, thereby driving our inflationary figures up as well. And what happens when the price of goods and services go up is that household income would actually not be able to catch up, which means that initially, if you were buying, let's say, 5 oranges at £1, now you may actually need more to buy more oranges, simply because the price of orange have moved from maybe like 20p to about 25p. So as compared to previously, where you could purchase 5 oranges, now with £1, you can actually purchase only 4 oranges at 0.25p. And so this is something that actually happens and affects most households, because according to research, about a third of all working adults and households in the UK are living paycheck to paycheck. So constant rise in the price of goods and services means that most households would have to borrow. And when you borrow, like we've stated earlier, you're likely going to pay more in interest because of this war. This brings us to the sixth and the last negative impact that we are likely going to see as a result of this war on our finances, and that is slow economic growth and unemployment. Already, we've seen high levels of unemployment because several companies around the globe are actually ditching human beings for artificial general intelligence. And so that is something that we'll discuss subsequently down the line in several videos that I'm planning to release. And so you might want to actually subscribe or like at this point so that you would actually be able to take advantage of those videos. But that notwithstanding, what you have to know is that this is not the time for you to actually go out there splashing money and spending anyhow. Because one thing about this war is that companies are actually having their operational costs being increased. The price of production is actually going to go up because of inflation, and also the prices of raw materials or inputs that they use on a daily to actually produce their output. So one thing that you want to know and want to do is that you want to shy away from spending money. This is a time for you to save in anticipation that, touch wood, should your company actually lay you off, you still have something to keep yourself going and your family going till you find something suitable. And so this is what you need to know. Try as much as possible to shy away from discretionary expenses and protect yourself, because you can actually be laid off simply because most companies out there are really having their operational costs and their bills going up. So this isn't the time for you to play. Thank you for spending time with us, and see you in the next video.